Hello everyone, this is Juan Sarmiento and today is Friday, June the 2nd. I have two potential candidates, but I'm afraid that they are not 100%. Let's start with LULU, Lululemon, and you have they exceeded expectations. They beat expectations by a wide margin, which is a big plus. Volatility has dropped now below 30 here, at least in the chart. And then we will look at the potential trade. Let's go to the Analyze tab, and I have selected June 30th. You can potentially do July 7th, but June 30th, you can see that this is 28 days to expiration. You can easily create this trade by going to the September, which will be the back month, and click on the at the money options, in which case in this case will be the 370 or 380. 370 will be more appropriate, so let's say buy straddle, okay? And you can duplicate that and then go to the front month option, which will be 28 days to expiration, could be 35, same strike price. Press the control key and simply say analyze sell straddle, and that creates the exact trade. You can save it for future use, okay? You can select July if it makes more sense. Select the July 7th. See what is the best price, and most of all what the options look like. I see that the calls in the back month options is a little expensive in comparison to the others. That's probably more than 3%. Let's just do the calculation so you know how I go about doing this. Let's clear the memory here and focus here on the volatility at the bottom right corner of your screen. So then we say that for the back month, 36.35 plus 28.85 and divide that by 2. And that's the average volatility for the call and the puts on the back month option. Clear the memory, store that in memory, and now do the same for the front month options. 30.13 plus 26.5 divided by 2, and subtract this from memory and recall, and as you can see it's more than 4%. So that's a big no-no. It's too much difference. So that means that the front month options are cheap and the back month options are expensive, so that means you're paying too much. Okay? So this is not going to do, all right? Unfortunately, you can save it, save the trade, and see if that changes in the following days. Let's go to AVGO, and that is exactly the same situation. You have the call, back month call is a little expensive compared to the front month. Verified is probably going to see the same problem, okay? So let's just enter the call, and I calculate the same way again. Focus here on the bottom right corner, and let's clear the memory. And we have 37 plus 30 divided by 2. I'm just going to do it quickly here. Add it to memory, and then do the same with the back month. 31.05 plus 29.93. Divide that by 2 and subtract it from memory, and then memory recall, that's 3. Okay, this actually is okay to do because it's 3% is what I'm looking for, unless I did something wrong. Let's see, show paper and revise. 37, 30, 67, 37, 30, 33. Okay, and yeah, it's probably very close. Okay, so I'm going to accept that as a possible trade. AVGO, do I have that trade? No. So then create duplicate order, and now I see another issue. When I say confirm and send, it's going to cost me for the one trade $16,000, and that's a little more. I can only enter trades that are $9,500 or 10% of my account, so that won't do. Okay, so that's my selection process. All right, it's not exactly what I wanted to do. I wanted to show you some trades, but unfortunately we don't really have good ones today. I looked at also at AXP, which is moving strongly today, and we already have a covered call here, which I've been itching to get rid of. But you can see now that the maximum profit has been reached here, so we can close this and potentially add a trade. Let's look at the chart. It's moving very strongly. They have, as you can see, oh, they didn't beat expectation, but it's been moving quite strongly, so I thought I would trade it. No, so let's not trade it. We delete this trade, leave that call as a lottery ticket. So we're gonna sell this covered call, okay? Let's say analyze closing. If you want to trade this further as a covered call, what you would do is roll it over, analyze rolling. And then the rolling should be to a month from now. So you would wait until next week and roll it over to July 7th, for example. And then you would have to look for a call that is worth doing. I'm not going to do that here. Please follow me on my covered call strategy for more details on how to do this. We will be covering this with many trades that I have already put in there. So let's close this trade. Okay. And if you let it be, it will give you $150 in credit. I'm just going to close that. And then this call here, well, who knows? This is to June the 16th, so we have two weeks. Is it possible that we'll go over 180? Possibly. So it's really a lottery ticket because there's so much room for that. Okay, let's leave that alone. And let's go to check my current positions. And ISRG, this stock is been going strongly, and what you want to do here is look if our current price is above the smiley face, the lower apex of the smiley face. I call the smiley face this curve, okay, smiley face. So if it is above that, you may begin to consider selling calls. I'm not going to do that. We have 37 delta, that's quite appropriate, okay? If the stock decides to go down, volatility will pick up, and that will be good too, okay? Because it will increase the profits on Vega value. Let's go to Oracle. Same thing here. I already adjusted my Oracle by rolling it up. You see that we have here 6 calls, long and 5 shorts. That means I have 1 outstanding call, but I have 2 rather at 105. So I've been adjusted as I went along in order to take money off the table. Right now we have June, which is next week. We could potentially do a rollover. At this point, it is 106. I don't really need to. But the next thing to do would be complete this rollover, analyze rolling. Like this, and same expression, but I would put 105 to 110, and that way you get a credit. See, you get almost $12. Not gonna do any of it. Okay, It looks fine the way it is right now. Next week, we could roll over the calls and add a put. Okay, so how about we do the call right now? Analyze rolling. And roll it over to 1 month from now, which will be July. Do I want to do that? Yes, because we have August calls here. Okay, so we're going to roll it over 1 more month. How is that good? Well, we get this 65-cent credit, which is equivalent to $65. Okay, so that reduces my costs. Most of all, if I let it go over this June date, the 9th of June, what would happen? I get assigned. Let's send that off. And we have this is Palo Alto Networks. Let's go to the monitor tab and we have it here. So yeah, this is a new trade, relatively new. And as you can see, we have a little bit of a profit. If it goes above 230, then that's when we adjust. Right now, we don't need to make any adjustments. And that's it. We have 4 trades. I'm hoping to get more coming up. So patience, my dear. Okay, that's all for today. Thank you very much for joining me. See you next time. Bye-bye.